Good afternoon, everybody. This is Dan Hussey with AlgoDayTrader.com. This is bringing you our end of week London recap. It's September 6, 2013, about a half hour, about 40 minutes after the European close. And we are watching, had a great day for volatility and ultimately for a number of trends. Got reactions, and let's begin with the S&P 500. From a 4-hour perspective, we are still coming up off of this 1630 level. This is one hell of a 4-hour candle, and a close up near these levels is going to be ultimately pretty nice bullish close. I wouldn't be surprised to see gaps up next week. The number that came out was a miss on. Everyone was expecting unemployment or employment to be positive, be a good thing, and it wasn't, and that might the rally here, the pullback into the support and the subsequent rally here, and the dollar selling we have seen afterwards is very likely the market pricing in additional quantitative easing. Like maybe the market was pricing in before this in anticipation of better than expected employment, and it looks like because of that miss, the market is responding exactly like you would think it would, as if there's more quantitative easing to come. Stocks rally, dollar gets sold, simple as that. So the S&P 500, we have upside targets of the 1740s coming from this daily extension long. We've pulled back into the full long off 1630s, and we are still holding 1668 as a resistance level, which ultimately looks like it needs to be retested here on the 4-hour or even 15-minute time frame. We pulled back today into the 61.8 line. Got a little sloppy, but we did hold the 61.8 line of a full long. It was also a test of prior pivot in the week, so definitely this 1640 support level is important, and as long as we remain above there, we should get a retest of the 1668s, and on this second test, hopefully a break of which could ultimately lead to the stop run all the way up to 1680s. Skip right to the euro. The euro, we from a 4-hour perspective here, we have purchased and gotten free on the long, drawn from there's two ways you can draw this long. Really, you could draw it from the 27.45 lows from April, to the highs of 2013. Are they? No, they're not the 2013 highs. I'm sorry, the highs at 34.53. Highs of coming out of the summer. Or you could draw it from the other low. I'm actually going to continue to draw this as this long, the larger one. It makes more sense as that one. Anyway, the 31s have traded their front run. They got participation to their first target here at the 31.82s. We got filled at the 85s, and we are now looking for potentially the 15-minute pullback here into the 31.50 area to start longs back up and continue us higher. This area might have been front run. They may also be using this original pull that was dirty and pulling from the entry of that low to high here and holding a long. So remains to be seen exactly what they're doing, but we are long the figure that we want to be long, just above the 31 handle. We were able to get free, and this is looking and starting off to be exactly the type of reaction we'd want in this type of trade for the 4-hour swing to the 136 handle. Going out to a daily chart, I want to remind everybody that we are coming up off of a daily full 50% long. This 50% long has upside targets of the 41s and would ultimately break the potential swing short off of the 49.46 anchor highs to 2012 lows. A break of that daily short would likely result in a short squeeze and a retest of the 150 figure, which would be a pleasant surprise. So while we do have targets at the 136, I'm going to be because our fill is fairly good for a swing trade, I am going to be contemplating on the way up, depending on the price action, if we really start screaming higher, very likely only taking half the position off at the 36s, or half of our remaining position off at the 136, and letting the remaining piece run to 141 or higher. That's of course, we will try to trade in and out of this trend along the way as well on smaller time frames, so that we can always have a nice piece on. It really depends if it gives us the opportunity to get on in other setups or not. If it just goes screaming higher, very likely I'll try to let a piece run. Otherwise, if we can get in and out of positions all the way, I would very much prefer to do that. The British pound, from a Globex perspective, upon the news, we ripped through highs and pulled immediately back into the full long. That's it. That's all the pound did today. There's a Globex long in the pound at the 140.56.24s, and this has been the support level we've been holding into the after hours. Going out to an hourly chart, we can draw up the full long from our 54.28 swing low to 56.84 high, and if we do trade down into the 150.56s, that is an area where we'd be anticipating a long as well. Be full ambush long. The Aussie US dollar, we had taken it in D trader. The extension long traded to target. Targets are holding to the tick here. Same anchor, new high. We have the next entry at the 91.45s. If we do end up going down there. The Aussie US dollar is holding next in the series traditional here against highs and flagging sideways, so we do have the potential to blow through those targets, and a print up at the 92.60s would actually break this extension short level that we've been watching. So it would be the cause for a major reversal in the Aussie, and that I would also be very interested to get long the Aussie upon breaks of their extensions. But I would want to see a break in both the Aussie and the Aussie yen before doing so. The Aussie yen has pulled back into a micro short, is trading a 6 to an 8 line, and ultimately retesting the 50% level of its 4-hour short right now. There was an extension long that it was flagging inside of and held and broke, and is now pulling into the full short. The extension short is drawn from a 96.08 anchor to lows. This is a 4-hour extension. We've had 3 waves up. It actually looks like a pretty decent sell here. And we will see if the Aussie yen can in fact start something in the micros here. It's defending a 6 to an 8 line. It can start something in the micros and sell off the rest of the day. Very likely could get the move off of this level to potentially back down inside of a range and fill the gap. Okay. Otherwise, we'd have to reverse engineer the levels that it's holding, and you can make a case for prior extensions here. So we'll see. If it does travel up and break the 92.40s, we will have the case, just like in the Aussie US dollar, for a major ambush long after the 4-hour trend breaks. And this trend, this ambush long would be in the direction of a 113 swing trade target from our daily. That target could take a long time to get to, but given the potential of entering into a swing trade at these levels, is the type of trade that you could potentially put a couple units on and literally set it and forget it for however long it takes to get to the 113 target. You're in positive carry the whole way, and would have really solid price appreciation as well. So we'll see what happens there. Again, not posting an official alert. I did sell some on DTrader. It's a very aggressive first target. It's a shot at a move to the downside for the rest of the day, and that's about it. But otherwise, I'm looking forward to potentially taking a short early next week, depending on where we open. The Euro Yen, nothing to say about anything there. Kiwi's in extension longs here on the 15-minute, drawn from a 79.28 anchor to highs. Kiwi could also now breaking the full short off of our 81.64 swing to lows. Kiwi could pull back into the 78.80 full ambush long here. So watching if the extension breaks, it's full halfway back in the 78.80s. Otherwise, it's higher in 15-minute extensions, drawn from our highs on Wednesday at a 79.29 anchor to highs. The dollar yen, very interesting. It too had potential extension longs, traded one to target, same anchor new high has broken, and really there is a valid ambush short here on the dollar yen, and I'm actually very interested in taking this short. We'll look at the larger time frame and see why in a moment, but unfortunately I'm going to have to wait probably until next week. Maybe we'll sell off the rest of the day, back down into 98.60 lows, and then maybe, I don't know, close right around here and we'll gap up into the 99.40s. That would be an instant sell on the open if we gap into the 50% short here. Okay, and I'm not looking for a home run. I'm just looking for a nice 120 pip sell-off down to the 98.15s, and it would very likely be quick and aggressive. And that type of short would also bolster our Eurodollar long. We'd be selling into some nice U.S. dollar strength. The U.S. dollar strength of the dollar yen rallying. We'd be selling into that, fading it, and then the subsequent sell-off down to the 98 region could help bolster a U.S. dollar sell-off across the board. Just help weakening the currency in general. So stepping out to now a 4-hour chart, we'll take a look at the full halfway back swing. We've broken swing 101.56 anchor to low. And ultimately we need a test of the 98 support. Now, going out and looking at this 4-hour chart, these levels here, we have not, inside of this range, which we have a very clear range, inside of this wedge, we have not held a 50% short, with the exception of this very first one. None of them have held to target, however. Every single one, we've gone 61.8 line, 61.8 line, 61.8 line. And if you're an Elliott waiver, this to me looks like an A, B, A down in 3, 1, 2, 3, B, C, clear 1, 2, 3, 1, 2, 3, zigzag, 1, 2, 3, D, and we are looking for that, basically the 50% short in an E wave down to 98, 97 region. And that's all I'd be looking for on this short. I actually really like the idea of that trade. Let's see if it gives it into the end of the day. I would prefer if it, if price just gapped up to that level next week in the open, because that's exactly the type of gap fade I look for. Or really, this is a valid short, and the short looks great. I'm not looking for it to be a major swing down, to 94s or 90s. We just know that this is a range. This is the high end of the range. We're coming off of it. The pattern has been to trade into 61.8 lines on both sides of the market now inside of this wedge, and that's all we're looking for, is it to trade down into this 61.8 line, at the very least down into 98 even, and then it can pop higher in the completion of its A, B, C, D, and then of this E leg of a triangle. This looks really clean, looks really good, and could it go higher now? Yeah, you can make a case that this is already an A, B, C, D, E, or A, B, C, D, E, and then this is the move out of the triangle. You can definitely make a case for that, but even then, even then, that's a kind of a be a very tough buy. So, I don't like that. Looks like the dollar yen did in fact get a rally. It's prior long here. Defended 618 lines, hit targets. If you take entry lows to target highs here, it did get a reaction almost to the pip from 50% line long. So, tough. That makes things interesting. Okay, so maybe sitting back on the dollar yen might be the best. Might be the best bet. Probably get free, but probably best to just play it safe. So, alright. Anyway, definitely looking for a triangle, and potentially could move out of that triangle now. But failure to sustain a rally above 100, every time up it's been faded. I'm not too sure about it. Okay. And finally, the Euro Aussie. Yeah, I'll take a look at gold actually after this. The Euro Aussie stepping out to a daily time frame. This is a really interesting chart. This is what's going to probably bolster our Euro US dollar trade in the end. Is the Euro Aussie strength. There was a full long, went to and blew through targets on the daily, drawing from the 92 or 131.90. I'm sorry, it's basically 132 anchor. Is a February 1st highs to highs. We have a full pullback coming here into the 41.09 area. Going down to an hourly chart, we have a valid full short off of highs, which targets the 141 area, as well as a next in the series extension short drawn from the 146.15 anchor to lows now. So we have resistance at the 44.40 and the 46.40 basically. Outside of that, it's micros, and these are the levels I'm concerned with. Either a rally up into the 44.38s before the collapse, or potentially even all the way up to the 46s. It's going to be interesting to watch and analyze both the Euro US dollar and the Aussie US dollar through this period, because if this just decides to come straight down into 41s, we're going to need to see a lot of Aussie strength, and the Aussie continuing to have up days that are probably twice as much as what the euro dollar is, and that's what it is today. It's almost twice the rally of what the euro dollar's done, which is fine. If that's the case, then once we get down to 41s, that's where we're going to hopefully see the euro strength really come into the market, and not necessarily Aussie weakness, but it should outpace then the Aussie to the upside. So, because otherwise the Euro Aussie does have the potential to weigh on a Euro US dollar position, but we are closer to support than we are not. Okay. And finally, gold. We've been watching gold on the 4-hour time frame. We are looking ultimately for the move, what is going to take us up into 151s. Gold has today pulled into a full short off of its high again, and you really have to reverse engineer levels here for gold and kind of force things to find a level that it's holding. So I'm kind of biased towards a pullback into 1300 still, and then the rally up into 1550s, and then that's going to be the tell. The 1550s will be a tell if we are going to head down to 1,000 or not. I still think we're pulling back all the way to 1,000 to 960 in gold. It needs its full halfway back long after breaking massive, massive daily trends here. We broke extension longs. And it needs a full pullback. So that's about all there is to say about gold. So yeah, I hope those that have been in here, during our promotional free week, I hope you guys have enjoyed what we've offered. markets look like they're starting to trend. We're seeing really clear reactions from really key technical levels. So I think it's safe to say we can wave the flag that summer trading's finally over, and markets are starting to try to set up their trends that could be, in some cases, swings for the remainder of the year. That's typically what we see. So with that being said, have a great weekend, everybody. I'm going to end the webinar now. I will post our update. I will post this update for your viewing pleasure. We'll also be posting a end of week recap sometime over the weekend, maybe later today too. I'm not entirely sure when I'll have time to do it. Kind of got a busy weekend ahead of me. We are taking the Euro US dollar home. That's it. I'm going to be watching the dollar yen. I haven't quite made up my mind, as well as the Aussie yen for next week for potential setups to for yen strength. That's about it. So have a great weekend, everybody, and we'll be back with you as price action develops.